Okay, today we've got James Walker with Ares Strategic Mining, and he's going to talk about something that most of us know very little about, but happens to be something that's very important to the United States. So, James, take it away.
Sure, no worries. Just let me share screen. I'll try and walk through a presentation in like 15 to 20 minutes, and hopefully it'll tell you a little bit about fluorspar so people can understand it a little bit better. All right. Just jumping straight into it. Actually, just before I go into what fluorspar is, obviously, Ares Strategic Mining, it's a publicly traded company on the CSE and the OTCQX. Its flagship project that they're pursuing the most is a fluorspar project down in Utah. Typically, when I mention fluorspar, my response I usually get is, "What is that?" And that's for a good reason, actually, because there was a real thriving fluorspar industry, North America, really in the 50s, 60s, 70s, 80s, 90s. What ended up happening was that a lot of the industry got shipped overseas and offshored, particularly when China was industrializing and it was mining all of its high-grade deposits, flooding the market with cheap product, and that sort of killed industry. And for that reason, what was once a big industry became a non-existent industry, and that expertise moved on. And as a consequence, no one really knows what fluorspar is, but it's used in just about everything, and we can go into that a little bit more. But steel, aluminum, hydrofluoric acid, fluorine, refrigeration units, lithium-ion batteries, cement, glass. I mean, the US imports 100% of this product that it needs on an annual basis, and it's really a market that's controlled by China. But even China, which basically destroyed the industry in Canada and the US, even they've gone from being a net exporter to a net importer now, because once their high grade was mined out, they became dependent on further imports just to keep their construction industries going, nuclear industries going, chemical industries going. And really, if you want to understand how the industry kind of fundamentally breaks down in terms of products, there's really two main categories, and they split off a bit further from there. But metallurgical grade is really anything from 60 all the way up to the 97%, 97% and 97% plus is an acid grade. And they're used in different products. The acid grade is used in things like hydrofluoric acid manufacture, refrigeration units, lithium-ion batteries. Metallurgical grade, principally steel. And if you think in the US, there's like 80 million tons of steel manufactured on an annual basis, each needing about 20 pounds of fluorspar per ton. It's a pretty significant requirement. It is a critical mineral in the US, which means that it's classified. It's vital to the economic security of the country. And this is actually mirrored in Canada as well, where it's a critical mineral up there. Again, vital to the economic security of the country, which is also kind of surprising that no one knows what it is when it's obviously so fundamentally important to industry and to a country's actual stability, industrial stability and output. Okay. I mentioned just very briefly about the requirements on the steel. There's some obviously very interesting things that are happening with fluorspar at the moment. One that I should mention here, just because it's got the big steam tunnels there, is that there's sort of a big push back into nuclear energy at the moment, particularly as both the US and Canada realize that their grids are at capacity. And if you want to upgrade the grids so they can output the power that's required, you really need to sink about $5 trillion into upgrading that grid. So the tech industry, which is becoming increasingly power hungry because of data centers, they're looking for nuclear solutions. To actually get to a reactor, obviously you need enriched uranium. The fundamental ingredients that actually go into enriching uranium are uranium, as you can guess, and fluorspar, so uranium hexafluoride. Already the demand for fluorspar is going up because of lithium-ion batteries, but already we're beginning to see a big demand coming for future contracts for fluorspar in the nuclear industry too, as they begin to anticipate a big enrichment drive. And the government are putting billions of dollars at the moment into building back the fuel supply chain within the United States. And obviously fluorspar is going to be a beneficiary, or at least Ares will be a beneficiary of that drive back into domestic enrichment and domestic capability in the nuclear fuel supply chain. So within the US alone, it's a $2.5 billion industry. Now, what I would say is that it's actually substantially larger than that. This is in terms of raw products that are sourced on an annual basis that come into the country. But if you look at all the downstream products, say for instance, like lithium-ion batteries, refrigeration units, all of these things would actually fundamentally require fluorspar to go in with them. You really get an idea of the sort of size of the industry. I mean, even looking here, these are enormous industries. I mean, all the refrigeration units that get brought into the country essentially already have the fluorspar processed and fitted to the units, and it doesn't get counted as the import. So that $2.5 billion really, which for raw products really fundamentally misses the size of the imports of this mineral and how reliant all these industries are on this mineral for perpetuation. So just like to talk a little bit about our project, because when I was starting off the company, I inherited essentially a shell, and I was looking for a company or a project that was near to production. I could see ready cash flows, wasn't overly complicated, wouldn't need hundreds of millions of dollars of capital, like basically everybody looks for. What was very interesting is when I found this project, it was still being mined. There's an area in the Spore Mountain area called the Lost Sheep Mine, and there were two artisanal miners who had been just two guys who had been mining it since they were in their 20s. They were in their 60s and 70s, and they were still going, and they were just basically taking the mineral out of the ground and putting it into a bag. And obviously, that was obviously very indicative of the fact that they had unusually high grades there. I thought actually with a little bit of money and a bit of a processing operation brought in, we could make this a very profitable operation, certainly upscale it significantly so we could make a big industrial sized operation. So obviously we did all the normal things, geophysics, LiDAR, drilling, assaying, metallurgical work, all those kind of things. Obviously we found that the grades were unusually high. What was also very nice about this too is that, well, it was good for us. But what had happened was when the US fluorspar industry had been destroyed, the other claimants across the Spore Mountain had either moved on to something else or died of old age. And we staked the entire mountain range to give us a district-sized scale operation. And as we worked on this, actually, we began to attract increasing support from the government. That began with a USDA loan that allowed us to buy industrial land for a processing facility and ponds. And we went off and built warehousing and industrial land there. And then that was followed by a manufacturing bond that was gifted to us by the state of Utah that allowed us to buy a flotation plant. And then we began to attract some institutional investment. And then the state of Utah followed up with an $11 million grant to ensure that we could fully construct a flotation facility, because we were readying ourselves to produce product in anticipation of a potential government contract, because there was a drive to build back a national stockpile. And we were the only contender in the country actually in a reasonable situation where we could actually proffer a feasible plan to supply the government with the acid spar that they would need to replenish the national stockpiles, which the Clinton administration had sold off. So we, after consolidating the district, as I said, we did all the development work that you would normally expect. If you look at the bottom left picture there, you can sort of see the mines that we've accumulated over time. On the right-hand side of that same picture, you'll see the Lost Sheep Mine, just on the second right from the end. That's where our permitted area is. At that area, we've done all the ramp installations, the adits installations, the ventilation systems, shotcreting, rock bolting, bought all the heavy mining equipment. And obviously we drilled out all the ore bodies, and you can sort of see to your right there, the bottom right-hand picture, just kind of how the ore bodies look underground as we drill them out. It's a bit of an odd geological occurrence because they're non-contiguous fluorspar pipes. So each particular pipe needs its own drill program. Even though we've identified something like, I think, 200 pipes so far, really across our district scale, you could never make sort of a global resource of all of them, because they each need, you'd spend about 20 years and probably like $100 million just drilling out each individual pipe, because you can't interpolate between drill holes, unfortunately. But it's very rich ore, it's very sizable, and it's pretty easy to access. So, I mentioned that we'd purchased an industrial estate. So you can sort of see our 50-acre industrial site there in the top picture. We obviously warehousing, we built in and we brought in our plants. What's changed in that picture, obviously, recently is the plants have now been installed alongside that, those warehousing. That contains our offices and storage facilities, some of our heavy mining equipment, and we've also installed ponds into that area as well. But obviously, that was very, very fundamentally important. So we had a technical headquarters down in Utah where all of our mining engineers and our mining crews and our processing engineers could all be sited in one place. And those pictures just beneath the facility, those are in progress construction shots, but obviously it's much more advanced since then. And there's a full plant that's been constructed there. At the end of 2025, we actually reached a point where the mines were all installed and permitted, and the adits had intersected the big ore bodies. And so we're obviously ready to start pulling out material. And so some material we did start pulling out, but the real critical path is just fitting the electrics now to the lumps plant so we can have that first production near term now. So, and these are a bit more advanced shots. Still, we're a bit further along this too, but you can sort of see the big, heavy, the sort of scale of the machinery we're fitting for our processing plant down in Delta, Utah. And these plants will actually have much greater capacity than our mining will allow for. The real bottleneck on our process will be the mining itself, the way the drill and blast operation, the removal of ore from the adit system. That'll really constrain us to about 50,000 to 60,000 tons of final product on an annual basis. But if we open up secondary and tertiary plants, the plants themselves, secondary or tertiary mine sites, the plants themselves have a much greater capacity to produce a much more output than they're currently anticipated to do initially. What's also quite interesting about this too is that very recently we found co-located rare earth minerals within the ore, and they were actually in fairly high concentration, enough concentration to get government support provided to us by the Ames National Laboratory and the Idaho State University to begin looking at the metallurgy necessary to adapt our flotation plant to create a gallium and germanium concentrate. So we're working with them currently and the Department of Energy at looking at how we could produce principally gallium, because gallium, China deliberately cut the US off. There was a total export ban on that. Really, it was the tech warfare just to try and impede the US's advancements within AI and the tech space in general, just so China had a chance to catch up. So that's another prospect that's quite interesting for us. It won't be immediate. We've still got a lot of work to do on the metallurgy and the plant modifications. But once that's done, it'd be very hopeful if we can get that byproduct, especially as most of the work, the mining and the processing plants have already been put in place. And this would hopefully just be a bonus on top of our fluorspar production. So how this is going to look at the moment, the 1 to 4 months, actually, we've covered all of that stuff now. So secondary ventilation system's been installed. We've initially transported some initial product to site, and we've installed all of the heavy mining equipment. There is going to be some electrics and control and instrumentation that's going to be necessary to fit to the lumps plant before we turn it on and run it at full capacity. But after that, we're really going to go straight into full mining operations and begin pulling out as much ore as we can. And at the same time we're doing that, we'll begin the construction of the flotation plant. But I think we want to get into some initial revenue, setting that metallurgical grade, and then move into that acid spar product, which we now have a government contract to supply the DoD with something like 180 million or something like that, $180 million worth of acid spar over the next 5 years. So it's obviously very nice to have that contract that basically ensures that we've got a perpetual customer that's not going to run out of money anytime soon either. And I think once we really get into that full mining operation, we'll begin, we have our own drills up at site. We'll just begin drilling out the secondary and tertiary mine sites just so we can look at the increasing incapacity of the district to feed the plant some extra produce. We've got, aside from the government contract as well, we've got another offtake agreement in place at the moment with Kramer Erzkontor, a big commodity broker that specializes in supplying steel to manufacturers. The steel industry is obviously very keen to get a domestic supply of fluorspar because, one, it increases the strength of the steel and reduces the cost of that production of steel. So obviously very keen to get hold of this. Steel refineries, we found, typically prefer to deal with brokers just so because it allows them flexibility to compare prices and not be contractually obliged. But I mean, the nice part is that there's no shortage of demand there. We also do have an institutional investor that's now involved in the company as well. They've invested based on our own stock performance, and I think we're receiving something at the moment like a 200% increase upon our investment with them as they supply the company with money on a monthly basis. That's really been, especially during some of the slower periods of production and slower market periods, have been really, really fundamentally important for keeping the company really progressing and building and constructing, even when equity was very difficult to raise. So we've jumped up since this screenshot here of the price. I think this was in US dollars, but I think we're sitting somewhere around about 50 cents US dollars at the moment. I can't remember exactly. But I think even though we are on the OTCQX in the US, the plan this year will be an uplist to the NASDAQ, especially coinciding with revenue, the government contract announcement. And then we'll obviously try and expose the company to a greater volume and shareholder base, particularly as we've got a number of complaints from US shareholders that are Charles Schwab or Ameritrade that found it very difficult to deal on the pink sheets. So, and this is our management team. I don't need to dig too much into all of these individuals, but a few people of note. Bob Lee, who's a director of ours, he was very fundamentally useful. We approached him because he ran several fluorspar mines in Asia, and when we were doing all the metallurgical work, what was very difficult is that even SGS did not know how to build a fluorspar facility, and having him actually to design a lot of the equipment around our particular ore and our metallurgy was very important. And Raul is also a fluorspar expert who worked on Europe's largest fluorspar mine in Spain. So Brian, I got a question from you actually. So 1 second.
Yeah, we can go ahead. If you're James, if you're done, we can go ahead and jump right into questions.
Yeah, sure.
So
I will.
Brian, go ahead and go first.
Yeah, thank you, James. I didn't mean to jump the gun, but I knew everybody else was going to throw their hands up, so I tried to beat them. I think my compadres in this call will go into the economics. I'm pretty confident of that. So I just really have two questions. What happened on October 9th and in 2021?
October 9th in 2021.
October 9th of this year and in the halt trading in 2021.
Oh yeah. So what happened was in 2021, the stock really began taking off, and when the regulator asked us why it was taking off, essentially we couldn't give them any sort of material reason. So they basically halted us and did a complete audit over 4 months. And then when they found nothing, they just let us go back and trade. This was an incredibly irritating period because one, we hadn't done anything. We had our lawyers obviously try to get them to at least recommence the trading while they did their audit. But they did a full audit of the company, all the accounts, all the press releases, all of our technical reports, all of our stock, everything, just to try and find out what was actually happening with the trade. Because one, they just couldn't see why we had been making so much progress. And when the stock was going from 16 cents, I think it was, all the way up, it went from 18 cents to 16 and then all the way up to about 80 cents. When it got about 80 cents, they just halted us. And that killed the momentum of the company. We actually had raises that were planned in 2021 to put a few extra $1 million in the bank account, and they killed that. They killed the momentum completely. And then once we came back to trading, I think we came back in at like 25 cents or something like that. It was actually one of the most frustrating things I think that's ever happened to us, especially because at the end they were like, "No, you're okay. We haven't found anything. Off you go. Go back to trading."
Okay. What about the recent October 9th?
So what happened there was, again, I was actually abroad at this time. So I got a call from Ciro asking what the rise in stock was for. And I was like, I don't know. Like, I wasn't sure. So eventually what we realized had happened was that the Department of Defense had published a sole source solicitation for $250 million contract, and they'd named Ares as the sole source. and Reddit had picked up on that that sole source announcement, and they had begun trading the stock without actually management or the company knowing about it. In fact, we didn't even know about when they would be publishing the sole source solicitation naming us. We'd been going back and forward with them for a long time, but then they published that with our name, and it just went nuts after that. And it was very badly timed because we had a price control for another financing at that point, and then that got dissolved because the I think the price was locked in at 40 cents, and then the price went all the way up to like $1. Yeah. Yeah. So that was basically what happened.
So that financing didn't go through?
Oh no, it did in the end. So basically we reached an agreement with the CSE. We were capped at a $10 million raise. And I think they allowed us to do the raise at 45 cents. But originally, we wanted to do much more, but they just said because of at the time we were doing the financing, it wasn't actually at 45 cents, it was sitting at 90, but we had price control at 45. And so what happened was obviously we brought the shares back, the share price back down again because of that financing. But we'd had it all played out, and the DoD announcement basically upset that process a little bit. So we had the spike, and then our own financing, which had been arranged prior to the DoD announcement, brought the stock back down to about 45 cents.
So did the DoD announcement have any validity to it, or?
Yes, actually, we were awarded formally the DoD contract in the end. So we do have a 5-year contract at the moment now with the Department of Defense to supply them with. Can't remember how much it is. It's something like 50, 60, it's something like 200,000 tons, I think, over the next 5 years. It's something like that, or 260,000 tons. It's great. It's a lot of fluorspar, essentially, we've got to produce for them over the next 5 years.
And is that at market prices, or is that a cost plus deal?
It's a little bit more competitive. So we are selling to them at effectively what we would prefer to sell at from the Lost Sheep project if we could. They basically they built in a bit of a premium for us as well, just to ensure that because it is fixed for 5 years, if there's massive fluctuations in the price, which we anticipate there would be, we couldn't take advantage of them. So they built that into the consideration. We have a better upfront cost than we could probably get if we were to sell on the open market right now.
Okay. All right. Thank you.
Thanks, Brian. Nick.
Hi, James. Thanks for the presentation. I just want to get a better idea on the economics here. So can you tell me, like, what is the cost to produce like a metric ton of this stuff, and how does that compare with, say, mines in Mexico or China?
Sure. So actually, this is something that fundamentally changed quite a lot, because the first engineering analysis we did was in 2021, and the price, the OPEX per ton was about between $150 and $200. Now that jumped quite significantly because everything got more expensive, particularly materials, and it's really hovering somewhere around about $300 a ton now. So it really went up quite a lot. But for instance, the selling price that we've got with the government is sitting somewhere at about $600 a ton. So we're still hoping for about a 50% margin on the acid spar per ton. The margin on the metallurgical grade will probably be a little bit less. Selling price somewhere region for a metallurgical lump, which is preferred by the steel manufacturers, that sits somewhere between about $500 and $550 a ton. But still, it's a reasonable margin, and we're still quite far off the anticipated OPEX. Even the OPEX that's significantly increased just because of rising inflationary pressures.
Okay, and how does that compare with, like, say, I know it's a different ball game here because you've got government support in various ways, but how does that just compare with, like, the cost of, like, the lowest cost producers in the world, say in
so it's a bit of a difficult comparison, because even though I mentioned there's acid spar and there's metallurgical grade, within those categories, the specifications, well, the price that you get for those is very much determined not by the purity of the fluorspar, but by the deleterious elements within that. So arsenic content, sulfur, uranium, all that kind of thing. So the average price for, say, met spar, if you were to look it up, would probably be like $350 or $400 a ton. And you would think, well, that's way under what Aries would be producing for. But unfortunately, it doesn't differentiate along the specifications. So, for instance, if you were to take, say, I think you mentioned Mexican fluorspar. They run a great project down in Mexico. There's like the Las Cuevas mine. I think it's the majority producer in the whole country, like 80%. And currently, the US does get fluorspar from there, but they have an incredibly high arsenic content. So there's a lot of industries that actually can't utilize their fluorspar at all. But the ones that can will obviously pay a bit less for that particular type of fluorspar. So are we competitive? Absolutely. We're going to be selling at market prices. Are we going to be selling more than the averages that you could probably find online? Yes, we would be. But it's that specification that is determining the selling price rather than that average sort of market. So.
Gotcha. And just a quick follow-up. Obviously the administration and the geopolitical situation is very favorable for a company like yours right now, but those things can flip with the next election. How concerned should investors be that a lot of this story is dependent on political support that might evaporate in the next election?
I mean, the nice part now for us is that we've locked down a contract with the Department of Defense. Maximum amount of $250 million over the next 5 years at the very least. So that's a contract that's locked in. So we have that at minimum. And that basically just not only keeps us afloat, but it keeps us pretty profitable over the next 5 years. So, a change of administration wouldn't change anything with regard to that contract. If we're talking really long term, it'd be quite interesting because obviously a lot of these industries were offshored. And that was principally done because you can source things a bit cheaper. If there was a larger return towards some sort of globalization form that obviously the world had been pushing in previously, yeah, that could certainly open up more competition for us, especially internationally. What I would say though is that obviously we're very familiar with the global market, and we're friends with actually a lot of producers around the world now. And what's happened a little bit is that the high grades of fluorspar globally have really been depleted. Even China now is going into quite deep parts of Mongolia to try and find high grade because it's really struggling to get the product that it needs properly. So we're in a position where across the entire district, we still got that high grade. It was preserved just because the industry was shipped overseas. So in a way, we got lucky, even though the industry at large suffered. Even if there was a change of administration, there was a greater push towards globalization. And even after our contract had expired with the DoD, we would still have a high grade product that's very, very in demand. And we certainly, through our network, even Bob Lee, who I mentioned earlier, he could sell our acid spar for us all day long because it's just a decent enough grade that everyone kind of wants it.
Okay, thank you.
Great. Thanks, Nick. Mickey, you're up.
Yeah, I'm a geologist, but I don't see any geology on your website. So I think you should probably get your geologist to give us an idea what this deposit is and how it occurs. The one thing I did notice was on TMX Money, it shows insider selling over the last 12 months at 18 million shares. Can you please explain that?
Yeah, so actually that's only one person. That's only Bob Lee. So Bob Lee was the individual I mentioned that runs fluorspar mines. Originally, at the beginning of the company, he put a significant amount of money in to give us the necessary capital to actually start funding the exploration of the Lost Sheep mine. So he's now building a new mine in Thailand. And so he's taken money out of his own stock equity just so he can build that mine. Yeah. So what's very nice about this though is that obviously he told us he was going to do this and what it was going to be for. It effectively does give us more reach globally because we can coordinate global sales with them. So I mean, I've never sold a single share in Aries. Bob Lee obviously had to sell some money so he could obviously put this and build this this fluorspar mine in Thailand. And with regard geology, it's a bit of a. I was hoping the geologist could be on this, but well, we just lost him to Colombia, and he couldn't call in. But just to give you a bit of an understanding of the geology, it was what happened was that essentially there used to be a geological formation where there were cavities within a mountainside, and fluorspar mineralization, essentially a breccia, erupted through the fluorspar through the mountain and filled all the cavities. And then as the mountain sheared, that moved the pipes right across sort of a district scale area. But that's what's led to the sort of non-contiguous nature of the pipes. So you've got fluorspar that's now embedded in clays and limestone and hard rock. And so that's why you sort of have this, you can't sort of do an open pit and just have a big ore body in one go. You need this individual sort of ramp installation amongst a collection or a collection of pipes, and then offshoot adits just to intersect each one of those. We've built sort of spiral corkscrews that go deeper, so we intersect the ore body at different levels. And then it's just a drill and blast operation where we have an ore chute and we funnel the fluorspar down to the level of the adit, and then remove the fluorspar out through the adit and then the ramp, and then deliver it to site. So it's a bit of an unusual I think geological event. It's also made things a bit difficult for us too, because obviously when you're trying to get a project financed, I'm sure we all do it, I do it, is the first thing you look for is the resource of the project. And obviously that was something we could never do. And we realized that back in 2021 when we got, I think it was P&E Engineering out of Toronto to do full PEA on the site. And they basically said, you just need to go into production and run this like a quarry, because you can't run drilling operations for each one. You would just never raise enough money for it. So prove out 2 or 3 years of production and then just move down the mountain as you go. So hopefully that gives a good idea, but I'm not a geologist. I'm probably not providing enough information that would be interesting. So.
Couple other comments. Couldn't find a standard corporate PowerPoint presentation. I would suggest that's essential to attract investors. And concerning your numbers on the fluorspar industry, your method of calculation is basically, we're hosting this big sporting event and it's going to bring in X number of millions of dollars to our city. Well, if you do use USGS, 9.5 million tons per year, that's total fluorspar production, and that's been pretty stable from 2022 to 2025, which is the years I checked. U.S. apparent consumption, 430,000 tons per year. That's about 4% of the world. And you do the math now I took $450 a ton average price over the last few years, and that's $160 million U.S. industry. So it's not very big in terms of total effect in the United States. It's smaller than the graphite business worldwide.
Yeah, so I know what the USGS, you're looking at the USGS importation tonnage. So the problem with those is obviously, it's obviously 100% imported. What it doesn't show, unfortunately, is all the downstream products.
No, this is apparent consumption. This is more
exactly of raw fluorspar product. But if you like all the things that get imported, like lithium-ion batteries, uranium hexafluoride, unfortunately, those things don't count within those importation numbers. And also the estimates won't apply to us anyway, because we already have a locked-in price with the Department of Defense for much more than $450. So that wouldn't apply. The issue for a lot of companies is that because they can't source enough fluorspar, and those USGS numbers are obviously not indicative of the full, like for instance, like just as a mental math trick, think about the 80 million tons of steel that gets produced on an annual basis. If 80 million tons require 20 pounds of fluorspar in each ton. That's way in excess of 400,000 tons.
Yeah, but a lot of that's recycled too. So,
Yeah.
So it's a bit of,
you can't recycle fluorspar, unfortunately. Like, you can recycle steel and things like that, but you can't.
right. No, you
recycle
can't
fluorspar.
recycle the raw material, but you recycle HF, you recycle from petroleum plastics being made. A lot of that's being recycled too. So it's
You can.
it's a
It
bit
is-
of a mishmash, but it
It's a bit of a
certainly is
mishmash.
not in my opinion, not a $2.5 billion industry in the US every year.
It's much more than that, unfortunately. Like even Honeywell that make
Well, you're the
hydrofluoric
guy
acid-
that said $2.5 billion per year, unless
Yes, but
I didn't
but-
understand your slide.
Yeah, like, well, the $2.5 billion essentially, it's really it's still a bit of a low ball just because the derivatives of fluorspar are so expansive, and they, like for instance, even if you were to look at a lithium-ion battery, there's more fluorspar in a lithium-ion battery than there is lithium, but it doesn't get counted in the USGS importation. But it's a major component and it's billions of dollars.
Where's that
It's the same-
fluoride come from?
Well, like for instance, it comes from the country that is manufacturing the lithium-ion battery. So for instance, if it's China that's sending us the batteries, it's coming from China. But even China is now in a position where it's obviously a net importer. So it's getting things from Vietnam, from Thailand, basically and now it's basically, because it's getting so stuck with fluorspar, it's drifting into Mongolia and outer Mongolia to try and find the fluorspar it needs. But that when it makes that lithium-ion battery and it sells it into the US, it just doesn't get recorded as a fluorspar importation import. It gets recorded as a lithium-ion battery purchase. But there's more fluorspar in it than there is lithium.
Okay. Great. Thank you, Mickey. I think, Gary, you're up next.
Yeah, thank you, James, for your presentation. And also congratulations on the contract with the Pentagon. That's amazing. I've got a couple of questions for you. The first one is about uranium. You had a list that included the aluminum you were just talking about. You mentioned uranium in terms of the processing, but I didn't see it on the list. How reliant is uranium processing on the fluorspar? How big of a potential industry will this be to add to that list that you were referring to moving forward as the United States and presumably all the Western countries are moving heavily toward uranium? And the second question I have is, so currently there's no competition for Ares as you're the only permitted fluorspar mine in the US, as I understand it. As the US is now an active buyer and they're stockpiling these critical minerals for national security reasons, would you expect the government to look at the lack of competition that's existing as a potential bottleneck issue for them to acquire supply, and therefore they're going to permit other fluorspar mines to compete with you? And are there other potential mines in the pipeline right now that you're aware of?
Okay, so I'll start with the uranium stuff because, and then obviously I'll move on to other domestic competition, including Canada too, because actually Canada has some very good fluorspar deposits. So I would say on the uranium front, what's very interesting is, this is the way the fuel supply chain works with uranium, is that you have the uranium mining, and then you mill it into yellow cake, and then the next process after that is the conversion process, where you take that yellow cake and you turn it into uranium hexafluoride, because uranium hexafluoride is the feed that goes into all enrichment facilities, whether that's laser enrichment, gaseous diffusion, or centrifuge. So no matter what you do in the nuclear or uranium business, eventually you get to that conversion point, and you can't enrich without that fluorspar element. So at the moment, what I would say is that there's one conversion operation in the US at the moment, which is Converdyne, which was a subsidiary of Honeywell, and they currently actually only produce about a third of the uranium hexafluoride that's necessary to produce the fuel for the current nuclear fleet, like the existing reactors. So about a third. So they need to substantially increase already, even without any anticipated advanced reactors or an increase in nuclear, they would still need to triple the amount of nuclear uranium hexafluoride they produce domestically just to meet the current domestic demand. So what's actually likely to happen now is, because the tech industry is so stuck for power, and they're looking at a plateau of energy being in about 2 to 3 years. It's really going to go from about a third of production to about a tenth over between 2040 and 2050. So the demand for fluorspar in that market is going to be huge. Even if you wanted just to get the US to a point where they could just meet their current demand, already you would need enormous amounts of fluorspar, hydrofluoric acid, fluorine, just to go into the industry, just to ensure that uranium hexafluoride could be produced. And you mentioned as well other potential projects that
Yeah,
we're
because
aware of.
yeah, so you're the only currently permitted fluorspar mine in the US, but
Yes.
wouldn't the US essentially look at that as a potential bottleneck issue?
Yes, like to be honest, it's not something they're very happy about. Like we got the sole source solicitation from the Department of Defense, but like typically that's very unusual. They don't like doing that. They like to be able to tender a solicitation where they have options to choose from. And so we even found that we did get a lot of government support as we were building this mine. And that government support will likely be available for other companies as well to take advantage of. And I do know that there are other companies in the US with fluorspar claims, but I don't know of any companies that are doing substantial amounts of development work that would challenge us within the next few years. I would say actually in North America, outside of the Mexican operation, which is kind of catering towards a bit of a different market just because of the impurities in the fluorspar, would be the Canada Fluorspar project in Newfoundland. That has a large resource, but it's also had a bit of a choppy history where I think it's had 2 bankruptcies or something like that as it progressed. And I think they still need to raise somewhere in the region of about $100 million to get that into full production to bring it back online. I'm sure eventually they will work that problem out and they will produce a very good Canadian fluorspar operation, maybe in 2 to 3 years' time. But a lot of that product was previously anticipated to be utilized in the aluminum industry, particularly on the east coast of America. So I imagine they would probably try and renew a lot of those contracts and supply the aluminum industry. But like outside of that one, yeah, I'm not sure of anybody that's really making substantial amounts of progress towards a commercial production operation.
So if nobody's close, can you actually ramp up capabilities here to meet these?
Yes. So that's going to be the anticipation. The thing I want to do most at the moment to de-risk the company is get us into just a decent level of revenue where we're self-sustaining. I mean, that would be the best one. But where we are, for instance, in our permitted area, there's lots of fluorspar.
James froze.
Pipes around us. So what I want to do is drill to open up more ore bodies, and then I want to install a second ramp installation around a collection of pipes just northeast of where our current mining operation is. If we do that, then we can basically double our capacity, and the plants are enormous, so they could already produce like 2 to 3 times through output than we're going to be feeding into them initially. So definitely opening up that secondary mine, because the demand is there. Like one upsetting thing about the DoD thing was that we'd had very long conversations with people like Honeywell and big groups like that, and to try and supply everybody is now impossible, and so there's going to be some level of disappointment. But these are good relationships, and I would really like to try and supply the industry as widely as I can to diversify risk partially, but also once the national stockpiles are rebuilt, it would be very nice to be able to have big industry partners that we can work with on a decade-long basis rather than 5-year period.
Thank you, James. I really appreciate it.
No problem. Thanks,
Great.
Gary.
Okay, Lau, you're up next. Go ahead.
Thanks for the presentation, James. Sorry. For investors trying to understand progress, I was wondering what are the key catalysts they should be watching over the next 6 to 12 months? Like, for instance, you mentioned a potential NASDAQ uplisting, which I think you
Yes.
said was tied to revenue and contracts. But what are other major milestones investors
So
should
I would watch out for just announcements about that in particular. For instance, we'll announce who our bankers will be, who the lawyers will be, and we'll announce basically that we're going to go ahead with this and we're going to pursue this this NASDAQ uplisting. We have already started the process with regard looking at the legal requirements and the costs that will be involved, S1s, all that kind of thing to get the uplist. That's obviously very good for investors because it probably will correlate with a jump in the price just because it's exposure to a greater level of investors. And it's a particularly unique American story where unfortunately a lot of Americans can't get access to it. So that will be very important this year. For a lot of people, though, I think the most important thing will be first revenue. That'll be an announcement that's very imminent when we turn the plant on. But prior
Sorry,
to that,
on that point. Yes, initial revenue. So what does that mean in practice? Trial shipments, steady monthly sales, or what is that?
So, I mean, the nice part is that obviously we've obviously produced product already and sent it to customers. But what we had to do was we had to take our own ore and we had to run it through, say, an SGS process, or we had to send it to Bob Lee's plant in Thailand and he would run it to produce a final product. Or initially, obviously, we will run the product through our own plants just to demonstrate that we can produce similar grades and specifications to the previous samples we supplied to our customers. And so that will happen imminently when we turn the plants on. But then they're waiting for us basically to just turn things on, and they're willing to take our product as soon as we can produce it. But prior to that, I think the last step now is really the fitting of the electrical systems and the control instrumentation. We've done obviously the foundation works, the installation of the plants, all the fabrication that's necessary on site for the steel, but it's still not all hooked up electrically. And we just need to complete that final component to turn the plant on. And then the mine is actually ready to go. It's really just sitting there, and the ability for us to take product out of that mine or out of that mine and put it into the plant is there. We could do that tomorrow. It's the critical path is that is the plant electrical systems.
And when do you expect that'll happen?
Yeah.
So we're working on it now. So I think we just
Froze at the critical time. Came back a second ago. I assume he will again.
longer than the end of February. at the
Sorry,
very
James.
latest.
James,
Oh.
you actually froze up for that whole
Oh.
time. So if you could just give me a
Okay.
date. Yeah, just roughly what do you think is the timeline
Oh,
of when the
right.
plant will be turned
Yeah,
on?
yeah. Sorry about that. I don't know what's wrong with the internet. I was hoping actually it would be this month, but we've just had some longer lead times on some of the orders with regard to the electrical equipment. But we now have that on site and it's being fitted. So I would hope by the end of February that all that electrical work is done at the very latest, and then we just turn everything on and we're producing product.
Okay, great. Byron,
Thanks.
you're next.
Yes, thank you very much. Excuse me. Mickey asked you some questions, and I kind of echo those questions. On the geological side, I want to encourage you to get geological because, I like the idea, I like what you're doing, but I don't understand your geology. You didn't really give me enough to kind of chew on, and I'm not going to try to pin you down on the technical angles of it. A couple things though. Can you give us a resource and a mine life for what you've got? The idea that we're just going to wave our arms and say we're going to be a quarrying operation, that's kind of open-ended.
Yeah, to be
Interesting.
honest, we didn't like that very much either. What we wanted originally back in 2021 when we bought all the drill systems in was a global resource. And when we were told you can't interpolate between drill holes like you could a gold vein or something like that, obviously that made things a lot more tricky for us, especially with regard when you're doing road shows and the first thing you get asked is about resources. So we got SK Group in, I think, to do some initial resource estimates just on our initial drilling programs across 2 or 3 different pipe systems. I think they put a resource on those of those several pipes that were attacking immediately of something like 210 or 220,000 tons. But those are just like 2 or 3 collected pipes in one location rather than 150 across the whole area. So what we did just to try and prove things out was we took just a normal RC drill, and obviously we probably did core drilling to get the initial mine site so we could design the ramp installation and the adits and make sure that was all fitted very properly. But we also took the RC drill and we went down the mountain and we put drill holes into each of the pipes and we took assays. And so we assayed right across the district just to actually examine and then later demonstrate that the grades and the assays were consistent right across the right across the district. The difficulty is that, say for instance, one drill program for us was somewhere in the region about 400,000, 450,000 US. Now, if you apply that to 200 pipes, you can get an idea of like the cost problems that are involved of trying to put that global resource on the whole district. So the geology thing made things very difficult for us, I think, because it would have been a lot easier to raise equity if we had been able to interpolate between drill holes and we could have just gone down the mountain and then could like conventionally put a resource on as everyone else can do. So.
Okay. Another kind of angle on this, excuse me, you've got you say you have a Department of Defense contract, that's wonderful. Sorry. Because you're critical mineral, do you have a Defense Department priority code in terms of obtaining, say, the electrical equipment you need that you jump to the head of the line, something like that? Do you have one of those?
I actually don't even know anything about that. If that's a thing, though, I'm going to try and find out what that's about because I would certainly like to be prioritized. What's that called?
A priority code. I mean,
I'm going to make a note.
Who's your contract with, DLA? Or
DLA, yes, DLA. So it's ultimately
talk to your contracting officer and say, we're a critical mineral. You guys need us. You're giving us a lot of money for this. We want a priority code because we can't get the electrical equipment or we can't get, whatever it is we need. And then
Byron, I will go after that because, like even our, some of our electrical equipment we were hoping to receive in December. We didn't get until like mid-January. So, priority code. Yeah.
A priority code jumps you to the front of the line. It's always nice to have. And then what is it that you are going to deliver to the DLA? Is this going to be bags of crushed fluoride or something or what?
Yeah. So the way it's going to be acid spar. So it's basically 97. The CAF2, the calcium fluoride will be concentrated all the way up to about 97% purity. There are other specifications tied to that with regard arsenic content, sulfur content, those kind of things. But essentially the biggest factor is that 97% plus, because ultimately that's the most important feature of when you produce hydrofluoric acid and fluorine and those kind of derivatives. That's ultimately what they need. Particularly when the Clinton administration sold off all of that material, it later on placed them in a very difficult situation where they realized there had to be this big build back of, say, nuclear facilities as a good example. And I think the DOE in 2024 put like $8 billion back into private industry to help build back that infrastructure. Before they realized really that the ability for the country to manufacture the uranium hexafluoride actually wasn't there too. So they left an exemption to allow the US to still buy Russian uranium, highly enriched uranium. So they've continued, even now, they're still buying it. And they think that they're still going to continue buying it until 2028 or something like that, because they're stuck. And they're stuck because that's national stockpile is just not there. So.
Okay, well, everything you told me tells me that you ought to be eligible for a priority code. Talk to your contracting officer because they know the mechanisms to do that.
All right.
So, okay.
Thank you, Byron.
Awesome.
That's very helpful.
Thanks, Byron. Good information too. Graham, go ahead, please.
Hi, thank you so much for the presentation. I just wanted to ask, I tried to find the breakdown of ownership of the stock. Could you tell us what percentage of shares outstanding insiders and management hold and and so on and so forth?
Yeah, sure. So we are majority retail. I would say in the last year and a bit, we did attract a big institutional investor in. They probably own somewhere in the region of about 15 to 20% of the stock currently. They are overwhelmingly the biggest shareholder in the company now, that institutional investor. I would say outside of them, management and directors and insiders, it's probably somewhere in the region of about another 15%, probably approaching equivalency to the institutional investor. And that probably leaves somewhere like 70 or 60 to 70%, and that's all retail. Like we want to institutionalize our cap structure as much as possible, but I think when we speak to institutional investors, even though they like the story and they like the project and they like the contracts, they don't get involved until you're on a suitable exchange and you have revenue generation. And then that'll be the plan too. The NASDAQ uplisting is part of the strategy around institutionalizing that cap deck. So.
Okay, great. Dominic, you're muted.
Thank you very much. Hi, James. I've just got a few questions for you. Management and insiders, management itself, 10%, 15%.
Somewhere like that. I think probably 15, somewhere around about there, I would say.
Okay. Just on numbers, like Mickey, I noticed your presentation is not on your website. You've got to make that available. And I would also recommend you put one of the things I saw on the slides was production aim to be producing in 2025. Obviously, it's 2026.
Yes, I know. It was, to be honest, I didn't know the format of today, so I used an older presentation. But we did actually pull ore out of the ground and process a little bit of it in 2025. But yeah, it's really 2026. Yeah.
Target this, and which is a sort of red flag. But in any case,
yeah, Dominic, I have to say, I made him pull up that presentation right before you came in the room. So that's more, that was on me.
Your hand is wrapped. But my question to you is, you've got a $600 per ton price selling to US government. The offtake agreement I saw on there was $450 a ton. Your cost per ton is 300. How many tons do you anticipate producing in your first year?
So they do actually break down the number, the tonnage, or at least they do it in pounds within that solicitation on an annual basis. I think this year, I can't remember what the pounds were, but I think we calculated something like 15,000 tons that need to be produced later this year. Sort of, they've thankfully structured the deliverables around what they believe we can ramp up to. Oh. Sorry, Dominic.
Dominic, can't hear you for some reason. I'm not sure your microphone's.
Yes. The number I'm looking for. Can you hear me okay?
Yes, yeah. No, we can.
What I'm looking for is your total anticipated production in year one.
Oh, right. Sorry. It really will be somewhere in the region of about 20,000 tons, something like that. Because we won't really be online until, with the second plant, until something like September, October, when we'll switch over a predominant production to acid spar. So,
and you mentioned that somebody is giving you money. On the slide, it said you had $2.something million cash at the moment. How much money are they giving you, and at what price? Do you need to raise more money to get into cash flow next month? And I also noticed $30-something million in debt. Can you tell us about that as well?
Sure. So I think at the moment, in terms of what we've actually got in the account, it's somewhere in the region of about 8 or 9 million. Again, the presentation I didn't update just because, yeah, I just pulled it up at the last minute. The debt actually is deferred debt to the state. So, for instance, the state has allocated us about $20 million of 20 million in US. One was obviously to buy the flotation plant, and the other was for the full construction and installation of infrastructure. So we do owe that to the state. I think we have a grace period until next year just to allow us to get into production. And then obviously we got some very preferable rates on that debt. And it was partially as well just to avoid any sort of dilution within the company. We did have an ability to raise equity, but cheap government debt was obviously very preferable. So
fair enough. And this fee, $160 million contract that you've got with the US government, how much of that do they give you in advance, or is it only on delivery of?
So no, we have arranged it's just on a pay and delivery basis. So immediately as we produce, it's kind of an interesting one because typically if you were selling to a material broker, you would have sort of a 30 to 60-day period where you supplied them and then you got paid. With the DLA, because they're going to establish a I can't remember what it's called, but basically designate an area as a DoD storage facility, and then we would just basically move our product into that storage facility. The payment would be immediate upon the delivery. We do have a requirement with them with regard assaying. So we deliver the product and then we supply the assays and they approve them. At that point, we gain the capital, but it's really a supply and pay. So rather than money up front. So.
This person that's giving you money, are they still giving you money?
You mean the state of Utah and the government?
You said you've got somebody who's giving you money, but you didn't say at what price.
Sorry. Oh, yeah. Sorry. That was so the institutional investor Sorby. We put together a sharing agreement with them where we supplied them. They basically participated in a private placement, but based on our stock performance, they rewarding bonuses to us on a monthly basis because of strong performance, and that was resulting. I mean, say for instance, this month I think they sent us $300,000 as an example, and we've been getting that very consistently. And sometimes that's much larger. And obviously that sustains us without any further dilution because the stock has already been allocated to them in a private placement.
You don't need to raise any more money to get producing.
I mean, what I might do now is that with this government contract announced, we may just raise a bit of money to make sure the uplisting is all covered, as well as accelerate the construction of the flotation plant. But if say for instance, if we hadn't have got the DoD contract, I probably wouldn't try and accelerate anything. I would just move into the metallurgical grade and then let the sales of that pay for the construction of the flotation plant. But I want to meet the deadlines of this contract now, and I want to de-risk it as much as possible. So maybe I might raise a bit of money just to accelerate that construction. So,
and then last question: you mentioned there's no other producing mines in North America, but who else is a listed fluorspar company?
So there is one I know. Actually, coincidentally, they're in my building in Vancouver. So Clean Tech, I know, did go and stake a lot of claims in the Kentucky, Illinois area. I do know about that because Kentucky, Illinois used to be the real hub of the U.S. fluorspar industry. So are
they a pure play?
I think they haven't done any exploration yet. I don't want to speak for them, but I think it's prospective stuff. So,
okay, I meant do they a fluorspar company, or do they?
Yeah, I think that's principally their target is that they're targeting fluorspar. So
that's the only one you're aware of.
Yeah, but is there any? Yeah, are there any other ones that you're aware of that are trading anywhere?
Oh, not trade. I mean, Clean Tech's the one I'm aware of trading. I mean, we've come across a few mines in the past. I remember we found one in Colorado, and there was another one we knew of in Nevada. But these weren't really producing very much. Actually, in one case, I think it was the Colorado one. There was like one guy who was doing something very similar to the two old gentlemen that were mining the lost sheep before we took it on.
I know we're having trouble hearing Dominic, but I think what he's asking is like, is there another publicly traded company that is producing fluorspar that we could just look at as comparables to your company? Is that right, Dominic?
Yeah, exactly. Even just exploring. I want list companies in the game.
So not public and not something you could probably look into. I would say that the people that Clean Tech, I think they are publicly traded and they have gone up and snapped up properties. And there is, and in Canada, CFI, they're not public at the moment, but their intention will be to go public with the Canadian Fluorspar project. So, yeah.
Okay. All right. Thank you, Dominic. Lawrence, please.
Great project, James. It sounds like there's a lot of upside potential there. Um, already the questions have brought out a lot of extra details, but the one thing I wonder if you could expand on a little is the timeline and the scale. And for example, you mentioned a 50,000 ton initial capacity. Do you have a split between met versus acid? And then what will it look like as you scale up over what kind of time frame?
Sure. So I'm happy to answer this. So that 50,000 tons of final product, we're going to have to excavate somewhere in the region of about 120 to 130,000 tons of ore to get to that 50,000 tons of product. The 50,000 tons is really predicated on the fact that that's the 130,000 tons that we can remove from the ground is really where the mining engineers' maximum capacity that they can remove. So when we do, so how the timelines will look is we'll get the metallurgical plant up and running hopefully in February. That'll start producing metallurgical grade. So we'll only be producing metallurgical grade for at least 6 or 7 months until the flotation plant is completed. Now we'll obviously try and ramp up the production as much as we can during that period, and we will start some of the adjoining drilling just near the mining operation to start designing the mine installations, ramp installations that would go and the mine plan around those new sites. But the flotation plant, we hope to be finished construction sometime around about September, October, and then we turn that on. When that happens, it's very likely we will switch most of the production towards the flotation because the recoveries are better and the price that we sell for is better with the acid spar grade. So I reckon what the metallurgists reckoned is that not all product is going to be suitable for acid grade, and not all will be suitable for lumps. But if we produce as much acid as we could, that would still result in about 10 to 20% of metallurgical grade that cannot be turned into the acid spar. So I think the ongoing breakdown will be, certainly by the end of this year, will be sort of an 80-20 split, with that 80 predominantly going to go satisfy the DoD contract, and that other 20 being to satisfy steel manufacturers or Honeywell, for instance, in their chemical plant, those kind of facilities. And that's how it breaks down. What I would like as well is that if we can start bringing online maybe late this year, early next year, that second mine site, and we can start doubling capacity, then really hopefully 2027, that 50,000 could be, who knows, maybe it could be up to 60, 70, 80, 90, 100,000 tons a year. So we can start really increasing that tonnage output.
And the plant capacity has that capability as you're constrained by the mining. Is that correct?
Yeah. So I think it would be very difficult to get the mining up to a point where we would be able to exhaust the capacity of the processing plants. But the plants could effectively produce 150, 160,000 tons of final product on an annual basis if it had the feed necessary to do it. So.
Okay, great. Thanks.
Good. All right, Brent.
Right. Looks like I'm last, at least hopefully. So if I understand right, you don't have enough correlation and continuity between drill holes to come up with a resource, an official resource, which means there's no real technical report. And we don't really have an idea of what your mining costs are going to be, what your dilution factor might be, what your process cost might be, and how many pipes you've got that are going to come into this. Am I understanding right?
Not quite. Obviously, it does. There's nothing on the site about that kind of thing, but we have about 7 or 8 technical reports that have been done on the geology and the metallurgy and where things are. That fed into essentially a big PEA that we compiled, where we did break down all of the operational OPEX costs so we could arrive at a figure. That was prepared by P&E Engineering, and we obviously brought them in to do that economic analysis. So they did break everything down by what are the road costs going to be? What are they going to be the capex with regard to heavy mining equipment? What's going to be the processing costs, reagent costs? What's going to be the cost to actually get the rail spur operational? So that all was broken down as early as 2023, and then really the challenge after that became completing the mine plan and the engineering plan to get it into production. But if it's not on the website, and there's actually a separate report that identifies all the pipes at surface as well, like several hundred pipes. So, but like that's all internal stuff that I don't know has been shared. It's mostly because, I mean, it's kind of odd. There's a 43101 that we've done, like several of them, but the 43101 cannot be applied. We cannot meet the standard 43101 just because of the geological type of the facility. Like we can't ever get to a resource estimate compliant resource just because of the nature of the geological setting and how the pipes are distributed. So we've had to do all of the unfortunately we had to do all of the cost evaluations. We got them all externally done just for independence and assurance for the bankers that were backing the project. But they had to basically just do everything based on principally on the engineering that was involved of the processing and the production of the material, and then overall costs of how each pipe would be mined out. So costs of ramp installations, costs of adits, cost of the mining crews, cost of the ventilation systems, cost of the permitting. And then obviously that fed into the evaluation and the economics. But their conclusion essentially was just like, you're going to have to run this like a quarry. It was really quite unsatisfactory to us at the very beginning and quite disappointing. We were always trying to work out ways around the constraints. And the 43101 standards are actually very good, but in some projects you just can't apply anything unless you do vast drilling that's unfortunately not very necessary for an economic operation to launch in this kind of geological setting.
All right, thanks.
No problem.
Okay, thanks, Brent. Doug, you're last. Go ahead.
Okay, it's very helpful that you have this contract with the DoD for $600 a ton, but what's the history of fluorspar prices? How high and how low have they been over the years that you know of?
Yeah, it's quite an interesting one because I mentioned earlier on in the call that there's a tendency when you look up prices that they average out all of acid spar and they average out all of met spar, and it can be a bit misleading because you can have very different prices for the same grade. Say, for instance, you've got an 80% metallurgical grade. If it's in the form of lumps, as an example, it'll command a premium. If it's in a powdered form, it'll command slightly less. And if you've got high arsenic content, it'll bring the price down, or other deleterious elements within it. So historically,
and we lost him again.
if you were factoring in,
James, you froze again for 10 seconds.
Oh, sorry.
You stopped at historically.
Yeah, historically, actually, the price was fairly steady if you factor into account sort of inflationary pressures. What's happened very recently is that the demand for refrigeration units and aluminum and steel that's stayed very constant, but there's been a recent sort of spike in price, and that's come about largely because of the increasing demand of lithium-ion batteries that have come into it. So that has begun to push the price upwards. But it was essentially steady for a long time, and then the Chinese industrialization crashed that price and basically made it uneconomic to ever mine it. And then as China began to struggle to bring that price in, and other operations around the world started opening up globally again, the price began to creep up very gradually since the 90s. So it's sort of reached this point now where during COVID, it reached a real high point. Like there were metallurgical lumps selling for like $950 a ton that we know about because Bob Lee was selling for that price. And acid spar was really going for like between $800 and $1,000 a ton. Now, since COVID stopped, obviously that price has come down a little bit, but that gives you an idea of what it's spiked up to. And there will actually be possibilities in the future where metallurgical grades can sometimes be more in demand than the acid spar. So you do get these weird fluctuations where the lower purity products actually retail for more than the higher purity products. And so we obviously we have both plants so we can try and take advantage of that anomalous occurrence that periodically happens with fluorspar sales.
Okay, no, that's very helpful. So there's some reason to perhaps be bullish about higher fluorspar prices in the future. But let's see, we've got a company here with a $100 million market cap, and we've gone through some of the uncertainties about the resources you have and so forth. But do a little bit of arm waving for us. And what do you expect after you're in full production, let's say a year from now? What would you expect, or what would you like to see of the revenues and the net profits of the company be on our $100 million current market cap company?
So I know when we got our most recent external financials done, I can't remember who, it just slipped my mind who did them. They were using a $500 a ton sales price. And I think we were coming in somewhere in the region of about $20 million of profit on an annual basis with about a $40 million revenue. Now, what I would like to see is obviously that, say this year will be a bit of a low year because it's our commissioning year. Next year, when we're in full capacity, full production, and hopefully bringing online additional resources, I'd really like to see, a much greater revenue, a much greater profit margin, and then obviously with the expansion of the project, combined with the access to additional potential shareholders through the NASDAQ listing. I mean, it's difficult not to speculate, but I would really like to see the price be a lot higher than what it is currently, because we will be a very different position. Junior mining is in a bit of a difficult situation to try and move share prices. And I think that when we transition out of being a junior mining company into being a manufacturing company, it'll attract a different set of eyeballs, particularly amongst institutional investors that might be more interested in much longer term plays. I got to imagine that will correlate to a big jump in the share price, especially as we get added to indexes and funds as well as we start producing.
So, all right, so we've got about $30 million of debt right now, and you're hoping a year from now to be showing $20 million of profits, but perhaps more as you increase over the future. So that's an argument for the.
Well, now Doug is the one freezing up.
Oh, I'm glad it's not me. Sorry.
Yeah,
Doug,
must be the solar storm or something. I don't know.
Being quite actually $1 million. 27 anyway, $20 million of profits, net revenues. And you hope that's going to go up for a few reasons. What are you going to do with all this money when it comes in?
I mean, it's the nice part about what we're doing at the moment is that I know what's involved now to commission a fluorspar operation. It's not as simple as people might think, including myself 5 years ago when I started this. The potential for expansion into other fluorspar projects will be way easier for us than anyone else. We know the metallurgy now. We have access to the plants. We've got the tech. We should have the funds to actually push us there. So I would really, if anyone's in a position to expand beyond Utah, it's really us. That could be collaborative. That could be ourselves. We are Raul, our fluorspar geology expert. He is looking at additional properties. We're not investing anything too much at the moment. We want to be as careful as possible. But like long term with that money, I want to expand the company. I want to get more, grow it essentially. And there might even be possibility to even partner with some of the groups about derivative projects from fluorspar that we can work on. So maybe the expansion looks at how we could produce a fluorine product as an example, which would retail for much larger than, acid spar per ton as an example. So we're examining both expansion beyond Utah and also downstream products that we could potentially be involved in as well, just to go from manufacturing company to manufacturing and chemical company, maybe.
Okay. Very
Okay.
good.
All right, James, that was fantastic. Thank you very much for doing this. I appreciate it. We'll get we'll just chat privately for a minute after you go, and then I'll get this published tomorrow.
Okay, terrific, excellent. Thanks, Matt.
Okay.
Thanks, everybody.
Yeah, thank you so much.
Bye.
Thanks.
All right.
James.
So that's kind of a weird one. What do you guys think? I mean, I didn't even know what fluorspar was before these guys first reached out to us.
Well, if I
Go
can
on.
just start with what the basic, you got him, he's building a mine without a resource. He stated that the mineralization is too complicated to put together a resource. In my view, if you can't do that, all the other stuff is just a thumb suck. And it may work out great, it may not. But in my view, I'd like to see how this production goes over a year before putting money into it. It's just so many operations I've seen that go in half-hearted without knowing the resource or the capital to fix what's broken. It just doesn't work. I'd like to see, if you can't get a resource, you're kind of screwed.
Well, I kind of agree, because it means you can't present the blue sky. You have to base what they do on actual cash flows and real success, and you can't start projecting stuff 2 or 3 years into the future.
I have a question on that, guys. Would the Department of Defense do some due diligence in this regard in order to issue the contract, or would they just take his word for it based on what he's done so far and issue this $160 million contract moving forward? I mean, I'm asking, I really don't know, so I'm asking.
Let me chime in on that one. The DoD and the Defense Logistics Agency, they actually do have technical expertise inside the house, in-house. It's not as good as it used to be. There is no Bureau of Mines anymore. The USGS is, very scientific and tends not to be engineering and mining oriented, but they do homework. That said, there is also just this mad scramble within the Department of Defense to at least be able to show and wave the flag that we're securing our industrial base all the way down to the mine and the ore in the ground. It's a mad scramble in there right now to do this stuff, which is why you see money going to Perpetua for antimony. Why, my dear friends at UCOR with the rare earth play down in Alexandria, Louisiana. I mean, they're throwing money at these guys, and some of that money is going to work out. Some of that money is not going to work out. I mean, if this guy came to me and said, hey, here's what I got, but I don't have a defense contractor, it'd be like, I am totally not interested at this point. But when he says I do have a defense contract, it's like, well, shit, okay. It goes from being an absolute hard pass to being, well, this could be an intriguing speculation. But like Mickey said, like Brent said, where's your resource? What are your numbers? I mean, show me some real geology. I mean, if this is just a quarrying operation, I mean, the highway department quarries rock too, so, what can we say? I mean, historically it was mined by a bunch of old guys and they died off. Well, yeah, that's the story of the American West, isn't it? But can this guy take a bunch of old guys who died off and left all these mine, can he take this and put it into a true project? I mean, this doesn't have the technical quality of almost anything that we've seen before. But with the DoD contract, it moves a little bit higher up the speculative curve in my humble view.
Byron, I appreciate your perspective in answering the question. Thanks.
And just adding to that, you've got to look at the grade. I mean, he's talking 130,000 tons of ore to produce 50,000 tons of material with 90% grade in the final product. So it's got to be a pretty spectacular in situ grade. And without a lot of drilling, how are they going to maintain that kind of grade without massive dilution in the ore?
Well,
Yeah, their grade is, I believe, supposed to be about 75%, which sounds pretty remarkable. I mean, I've never seen fluorspar, but that would be easily the highest grade fluorspar I would have ever seen. We're already in a speculative sector. And I think something like this adds another level of speculation to what's already a speculative sector. I agree with Byron. I think the DoD thing gives it some validity in the market. They're obviously able to raise some money, but they're not going to raise the money from me, you know. And I think that I think that in a few years we could look back and say, well, that really worked out well for whoever put the money into it. And these are people who got an idea of a theme and threw money at it, and it's very likely going to work. The winter market, guys, where everything's working to some extent, and you know, and it's a big world and lots of opportunities, and you don't really have to reach, and you don't have to look too far to find things that are really going to, you know, multiply in price over the next couple of years.
I think it was a couple of people said this, but I really did not like the lack of corporate presentation on the website. I don't like, you know, if you're CEO and your job is essentially to drum up interest in the company, that stuff should be as accessible as possible. I'm also personally a little concerned about just how much of this is sort of, it almost seems like a meme stock in some ways with some of these retail Reddit driven spikes, which, I mean, very hard to allocate capital in something that's moving that aggressively and with that much volatility.
I'd just add my 2p, which is that, you know, I've looked at these kind of niche commodities many times over the years, and, you know, every year or two, there's a new niche commodity that comes along. And, you know, in my mind is helium from a few years ago. You've got to be, and if one of them works, then you get a 3 or 4, 10 copycats pretty soon after. And the advantage this company has, as far as I can tell, is it is the only kind of fluorspar commodity. But you've got to be, if you're going to make it work, and it does get quite meme stocky, as you say, but you've got to be damn good at telling the story. You've got to be really clear about why this is the most essential commodity, and the whole world's going to end, and AI is going to fall apart if we don't have this, whatever the story is. You know, you've got to have this commodity, and it's essential because of this, that, and the other. And then you've got to be shit hot at telling the story, and then you sort of create your own narrative, and then you start justifying it with your production and so on. But I don't think that guy, you know, he kind of knew his subject, but he talked a lot. But I think if that's going to work, that company's got to get better at telling the story, particularly the fluorspar story. Anyway, that's just my two.
I like that comment, by the way, Dominic. And let me just say, like, we owned Neo Development Corp in my newsletter, like the warrants. The founders got this essay for me about it. We made 500% on this. We accidentally bought it at the end of September. Total accident. The Reddit stuff came out, and the price increase was shocking. They don't even have any revenue, and they like hope to someday have whatever. My point is, all you guys that are geologists are correct on this stuff. But if this guy gets the U.S. listing, like you got to understand something. People cannot even buy his stock right now. If you try on Fidelity to buy the stock, you have to go through a warning sequence. You have to call up this number. You have to agree that you're going to lose all your money and all this stuff. It's a lot of barriers. And I just want to leave you guys with this. They did, since October 1, which captures that Reddit thing, they did 88.5 million shares in the US, and they did 103 million on the CSE, which is a terrible exchange. So basically, like, they've like benefited very little from this dramatic, you know, whatever you want to call it, meme stock, whatever is going on here. There's a lot of money flowing around the US, and they're looking for, like Dominic said, for somebody to say, guess what? We are essential. You know, we have this thing that nobody else can have, and just pictures of steel and bombs and aluminum, whatever. I'm telling you guys, like, the details matter to people like us on the stuff, but like to the investing public, it's all story. And if this guy uplists and tells the story, his stock will more than double. Now, details are going to matter after that for sure, like how this whole thing works, and people start looking under the hood more. It's all very true. But the opportunity in my mind is I look at this thing, this presentation, and I say, you know what? I bet I could turn $100,000 into $200,000 before the summer. What happens after that? Okay, it's going to get a little thicker, you know, as things go on. But I think that's the opportunity. When I'm looking at the Bloomberg, I'm on the Bloomberg here. All the stuff people brought up, Mickey was saying with the selling. I looked up the selling. This guy Bob Lee, he sold a little bit. He still has like 7%. It says in the thing. You know, this guy's probably like they said, you know, he got the thing going, whatever. I mean, this is going to happen, but I think that it's a game changer if they uplist and they got to hire somebody to tell the story. It's not that guy. That guy's not the storyteller. He seems like a very nice guy, though. I actually got a feeling of trust listening to him, but he needs to hire somebody that can preach. You got to hit the podium like it's a Baptist revival, and people will buy this thing. And you got one shot to do it. This is the time right now. Nobody's going to care about fluorite after the Trump situation dies down. This is like everybody in this business has been waiting for this to happen. This guy's got to nail this, and I think he can do it if he brings on a little help.
Hey, Tucker,
That's sort of my take.
I could recommend somebody to him for that position if you're open.
I've heard of people that have done this before, but you know, I'm in my tennis playing semi-retirement years.
Yeah,
so
yeah. No, I understand.
I've stopped getting haircuts as well, and I don't want to start getting them anymore.
All right. Well, awesome, guys. Thanks so much. I mean, I think you're right. If he tells the story right, it would be compelling, regardless of all the things you guys are saying. I know the smart people here. I understand what you're saying, but the idea that there is the U.S., you know, there is no fluorspar in the U.S. whatsoever. They can't enrich uranium without it. They have to rely on Russia for it right now. I mean, it's on the critical mineral list. I mean, there's a lot of compelling.
The story's there waiting to be told.
Matt's applying for the job.
No, I don't know either. But this is the thing I liked about it, though.
Let me weigh in here. The uranium hexafluoride, it's not for a lack of hexafluoride that we do not have upgrading of uranium enrichment or uranium in the U.S. It's we don't have the plants to do it. So now I'm not going to tell you that once we get the facilities built that we could not have a shortage of fluorspar. But that's kind of chicken before the egg.
It's the second thing. Yeah.
So
I understand that.
So I'll weigh in, and you know, I'm a libertarian, so I approach it a bit like this. Our tax dollars have already subsidized this company to the tune, I think, of eventually $250 million. And without building a mine, a mill, and a production plant, before you know if you have an ore body, is a bit of a reach for me. So they're not going to see any of my discretionary dollars.
Yeah, you know, as libertarians, you got to be bought. The amount of, I think the amount of money is going to be flowing into these mining companies from the state is going to be, I think it's going to blow us away. Honestly, I think they're just getting started with it. So, okay. Well, thank you very much, guys. I really appreciate it. We have another one of these on Thursday. I hope you all can make it. Same time on Thursday. Okay. Take care, guys.
Thanks, guys.
Thanks, Matt. Thank you.